Through the final few minutes of the trading day, we continue to see this bounce off the lows, with the Dow now off just 190 points. We have full team coverage for you. We have Victoria Fernandez, Crossmark's Global Investments Chief Market Strategist. Also, Stephanie Roth, JPM Private Bank Senior Markets Economist here. First, though, we want to get over to Jared Blickery, who was on the floor of the New York Stock Exchange. And Jared, what are investors or what are traders saying going into the close today?
They're wondering if I'm jinxing the whole deal. This is my third hit. Everything's in the red. But seriously, it is good news that the tech stocks are bouncing back today. We saw some action in the chips. If you look at the chip sector or industry group overall, lots of green, and that is thanks to, in part, analog devices. They announced earnings before the bell, which are very positive and speak well as to the second half of the year, looking like we're just kind of in a middle course correction for semiconductors right now. But then you take a look at the energy sector and financials, a lot of weakness there. So the value and cyclical trade just kind of coming off today. But I'm ignoring the biggest story of the day, aren't I? Because Bitcoin off hit 30,000, and then it rose to 42,000, then coming back down. I think we're going to see a lot more of this in the weeks and months to come, given the length of the consolidation, that long distribution top that we had over several months. It's going to take time to find a low. We could have the momentum low right now, but we're probably going to test 30,000, maybe go a little bit lower into the future.
Jared, there's another story today, and there's nothing like the first time, right? Because AMD is going to do, is it a $4 billion stock buyback, first in its history?
Yeah, so the chip stocks don't do a lot of dividend work. Sometimes they do some buybacks. Investors expect shareholder appreciation, expect the price, to increase over time. So AMD is going ahead with $4 billion. You take a look at some of the other stocks, like NVIDIA, they don't do this kind of thing, but overall it speaks well to the industry, and I think there's a lot of confidence going forward. So yeah, chip stocks is definitely a bright spot today. Some software stocks as well. It looks like Salesforce is getting upgraded, and so there's a lot of positive news in that particular space.
Jared, speaking of a stock that is certainly not a bright spot today, Tesla under pressure once again, shares off just around 2.5%, falling below its 200-day moving average. What do you make of the move that we've seen in Tesla recently?
It's below its 200-day moving average. Looks like it's going to close there. It is testing an area that it tested, a price low that it had a few months ago. So this is very critical for Tesla right now, but not looking the best. I think we could see a wipeout to about 500 or so. There's the closing bell, by the way, if you didn't hear it.
Loud and clear, Jared Blickery. We have a closing bell on Wall Street. Let's see where these markets are most likely going to finish the day, where they will probably settle. Give us a gavel. There you go. All right, so let's pull it up. We're going to see the markets off, but they are closing and going to settle off the session lows. The Dow recovered, and it's, off the session lows. It's going to be down about 163 points. The S&P 500 will be off about 12 points, and the NASDAQ will settle down just, you ready for this, just about 4 points. Some of the losers in the Dow today include Merck, Walmart, Apple, but the winners, as Jared was talking about, Salesforce up 3%, Intel up about 1%. Let's go to our guests and get their take on all of this. Victoria and Stephanie are both standing by. Stephanie, let me start with you. We've been told and warned about getting ready for a summer kind of slowdown, maybe even a correction. Should investors be surprised that we're witnessing this kind of volatility right now? And if so, how do you deal with it?
No, I don't think investors should be surprised at all. We've had a really strong recovery, both from an economic perspective and a market perspective. And now we're sitting here and we're at the peak of economic momentum, and now it's just about a transition into mid-cycle. So that tends to bring about volatility and transitions under the surface. So we shouldn't be surprised by that. We're expecting strong growth this year, but really now the focus should be on the risk. The risk certainly around inflation, that's come up quite a bit, what the Fed is going to do, and then should there be any concerns around the COVID outbreak. For now, everything is priced to perfection, and that makes sense. But we should just be watching and mindful of the risk that could come up, and that's what the market is starting to focus on.
It certainly was something that got the market today. Victoria, we saw losses much larger than what we saw into the close. We actually saw some buying action into the close, with the Dow closing off just 163 points. What do you think drove the latter half of the day's action in your view?
Well, it's very similar to kind of what we saw at the end of last week, Shauna, when the tech names really sold off and they got into that oversold territory. We saw people come in at the end of last week and start buying those names and saw them start to recover. I think some of that happened today. We had the news with Bitcoin and the China restrictions, and so we saw that name really fall off this morning, and I think it took tech with it somewhat. They're all considered a little bit of risk assets, and so if they were selling out of their crypto risk assets, perhaps people were selling out of some of their larger mega cap tech names as well. But I think after the Fed minutes came out, and there's been such a big question on inflation, which Stephanie mentioned as well, I think they started to realize, look, the Fed is where it's going to be. They are not going to move anytime soon. They're saying perhaps they start talking about tapering later in the year. So I think that allowed the market to take a little bit of a pause from the downside that we saw. It allowed people to come in and start buying some of those names that had hit some lower values today, and it allowed the market to recuperate just a little bit.
Victoria, if I can follow up with some of the things you just said, because you've pointed to the credit markets as canary in the coal mine. We've had guests who've said the next resistance for the 10-year is 1.695. We're almost there. What is an investor to make of that, given what we learned from the Fed today?
Yeah, I mean, look, we always say don't fight the Fed, right? That's the mantra that everyone says. And you hear that when maybe it's the opposite place of where we are right now. I think you can't fight the Fed when they're telling you they're not going to do anything. When you look at it that way, you look at 5-year break evens, you look at 10-year break evens, those levels are going higher. So does that mean we get a little bit of a steeper curve? Perhaps we do, but I don't think we're going to have the Fed move anytime soon, because they do feel the inflation components right now are transitory, and we tend to agree with them. And what the credit market is telling you is that they agree. We have a VIX moving higher, but we have investment grade credit spreads and even high yield spreads staying very consistent. For us, that says there's positive momentum left in the equity markets and they should continue to trend higher. Doesn't mean we won't have volatility. And again, I don't think we're going to get towards 2% on the 10-year anytime soon, but I would expect us to go back towards some of those levels we saw a couple months ago in the mid 170s.
Stephanie, what about you? Do you think the inflationary pressures that we're starting to see, do you agree with the Fed that it will most likely be transitory?
Absolutely. We think it should be transitory. The combination of the labor market is sparking fears of inflation, particularly after we got the latest jobs print. Inflation is jumping higher from a wage perspective, and that's driven largely by supply concerns. People are worried about going back to work as it relates to COVID. There's childcare concerns. And then, of course, there's generous unemployment benefits. So that's one area of transitory inflation. And then the second is on the supply side. We're seeing commodity inflation pick up pretty significantly. If you just look at the latest CPI print, that screamed transitory to us. Looking at used cars up 10% month over month, that just tells us that's transitory. It's a one-time hit. There could be other hits over the next couple of months. It's not as if the conversation around inflation is over. We just think that it's likely to be transitory and these effects will fade. But in the process, we are interested in some of the cyclical names as we head into the mid-cycle. So as highlighted earlier, rates are likely moving higher. We do like financials. We like some of the industrials names, and we continue to emphasize those as we head into mid-cycle, and that's when we'd be talking more about adjusting the portfolio for a mid-cycle playbook.
Stephanie, we've had discussions with people who've said, look, take a look at some of the traditional big tech companies because, at face value, they're expensive. But when you look at their metrics, they're undervalued right now compared to where they've been. What would you say to those people who might consider that?
Yeah, absolutely. On a free cash flow basis, a lot of the tech companies actually look fairly well attractive. The conversation around bubbles in equity markets, we don't agree with. When you look at them, certainly around the cash flow basis, when you look at the market relative to bond yields, we think that markets are fairly attractive here, and we continue to think that markets grind higher. We just would expect volatility to remain, specifically as we transition from this early to mid-cycle.
All right, I think we want to get over to Jared Blickery, who's still standing by on the floor of the New York Stock Exchange for his final thought. Jared, what can you tell us?
a couple of short stories here about where we've been with the pandemic and where we are right now. First of all, I get dressed 2 times a day now because I do the opening bell and the closing bell. So if you think I'm going back to my apartment and sitting in this suit all day, no, that doesn't happen. But another thing is I had lost my NYSE badge. They were nice enough to give me a new one. I scoured my house, but the office, I went back to our headquarters, didn't find it. And so I came in yesterday, and guess what? I had found it because it was in my back pocket. And you can imagine how that happened. And it really encapsulates what's happened over the last year.
All right, Jared Blickery, thanks so much. And of course, our thanks to our panel as well. We have Victoria Fernandez, Crossmark Global Investments Chief Market Strategist, and Stephanie Roth, JPM Private Bank Senior Markets Economist. Thank you both for joining us today.